The way a bank treats you is not an accident. It is a decision based on a single number. That number sits next to your name inside a database. Change the number, and you change everything about how they see you. These are the 10 levels where the treatment changes. Level 1, your balance is negative. You went under by $6. A charge you forgot was still set to auto-renew. The bank does not care it was $6. It cares you crossed a line. A $34 fee arrives within the hour. The penalty for being broke is that you become more broke. An $11 subscription processes next, and the system adds another $34. You now owe $79 for a $6 mistake. You call, and the hold music loops before a voice reads from a script. The fee cannot be reversed at this time. You ask for a manager, and no one ever calls back. The next morning your rent fails, and more charges follow. You skip dinner on Wednesday because the account is 200 deep. You walk into the branch, and the teller glances at her screen. You stop being a person in that moment. You become a balance amount, a risk score with a face. You leave without saying what you came to say. You stopped feeling like a customer. You started feeling like a problem the bank was already done with. Level 2, $300. You worked 20 hours of overtime to pull the account positive. The bank noticed, but not in the way you hoped. The maintenance fee arrives anyway, $12 taken automatically overnight. The minimum balance to avoid it is $1,500. You do not have $1,500. So you are paying the bank to hold the money you barely have. They offer you a secured card requiring your own money as collateral at 24%. You do not take it. The teller in front of you is laughing with the customer she just helped. When you step up, the smile becomes professional, and the energy in the room shifts. The next person walks up, and the warmth returns to her face. At $300, the bank does not see you as a customer. You exist in their system. You do not exist in their attention. Level 3, $3,000. Something shifted, not in your life, but in how the system reads you. Your direct deposit has been consistent for 6 months. The maintenance fee disappears without you asking. Credit card offers arrive in the mail, real ones this time. Not secured? Actual cards with a $3,000 limit. The same institution that rejected you 8 months ago now mails you approval letters. You apply for one and get approved in 90 seconds. You did not change, but the number next to your name did. The teller says good morning before you reach the counter. You are not invisible anymore. You are not respected either. But you are now something the bank considers worth selling things to. Level 4, $20,000. Your credit limit increases without you asking for it. The next morning, a real person calls with your name already in his system. Your bank has assigned you a personal relationship banker named James. The same bank that put you on hold for 40 minutes now calls you first. Your loan rate drops from 11% to 7% at this balance. The price of money got cheaper because you stopped looking like a risk. A fee appears on your statement, and you email James. 3 hours later, the fee is gone. The bank was never cruel to you when you were broke. The bank was indifferent, and indifference at scale looks exactly like cruelty. Level 5, $75,000. The word preferred appears on your bank statements. You did not earn that label. The balance earned it for you. James knows you have a sister in Phoenix because you mentioned it 9 months ago. He emails you on your birthday, and it is not an automated message. You walk in, and someone with a nameplate stands up to greet you. They walk you past the line where everyone else waits. The same line you stood in when your balance was $300. A mortgage pre-approval arrives in the mail without you requesting one. You mention a competing bank's offer to James, and he calls back within the hour. The bank sees you as worth defending. Level 6, $250,000. The bank stops being a place you go to. It becomes a service that moves toward you. He is asking when you would like to meet his colleague in wealth management. The colleague drives to your office with printed reports in a leather folder. He asks about your estate timeline, your tax structure, and your long-term goals. The conversation runs 90 minutes, and he does not try to close anything at the end. You are no longer being offered products, you are being consulted instead. A product is something the bank wants you to buy once. A consultation is something the bank wants you to need indefinitely. A wire issue resolves in the same call on the second ring. No hold music, no script. At $250,000, you are an asset the bank protects. Level 7, $750,000. You do not have a relationship banker anymore. You have a private wealth advisor, and the distinction is structural. He knows the first names of your children. The interest rate on your mortgage is not published anywhere. It is negotiated on a call between two parties who both have leverage. Paperwork that takes a standard customer 2 weeks takes 48 hours for you. You walk into a branch you have never visited, and they already know your name. The bank writes different rules for you. Level 8, $3 million. You do not have a banker anymore. You have a relationship, and that word separates this level from everything below. Your account is a named line item in someone's annual performance review. The institution organizes itself around the goal of not losing you. The deals are bespoke, not from a menu and not from a brochure. Terms written for one client and one situation. At $3 million, you do not apply for things because things apply to you. Investments arrive before they are publicly available anywhere. The bank does not have a customer at $3 million. The bank has a partner, and the partner has a name. Level 9, $15 million. The bank is no longer managing your money. The bank is managing your relationship with money. The chief investment officer calls to ask for your read on a sector, not to inform you, but to hear your thinking before a decision. The head of private banking flies out to understand what clients like you want next. You are shaping the institution that once charged you $34 for being broke. At $15 million, the bank treats you like a problem they cannot afford to lose. Level 10, $50 million. The bank does not set the terms anymore. You negotiate them as parties, with aligned long-term interests. Your capital is not a deposit sitting in an account earning interest. It is infrastructure the institution builds products and structures around. The relationship manager is not an employee assigned to serve your needs. He is a liaison between two financial entities with mutual stakes in the outcome. At $50 million, you do not bank here in any traditional sense. You and the institution function alongside each other. Somewhere right now, someone is staring at a minus sign on a screen. They went under by $6. A charge they forgot was still set to auto-renew. The fee arrives within the hour, $34. They call the number and the hold music loops. A voice reads from a script and says the fee cannot be reversed at this time. They do not know yet the system is working exactly as it was designed to. One day this institution will fly out to ask their opinion on a market. Today, it is charging them for not having enough. They are the same person at every balance. The bank decides who they are based on the number. The bank does not change across these 10 levels. The bank reveals what it always was,